Welcome, dear traders. Asian stock markets kicked off the new week with a decline. Hawkish comments made by the Fed policymakers last Friday worsened sentiment on Wall Street. Investors are less sure now that the Fed could slow the pace of a monetary tightening. Some of them have priced in a 75 basis point rate increase again. And the US dollar index may reach 110 points this week amid risk aversion and the Fed's hawkish rhetoric. Traders are now looking forward to Fed Chairman Jerome Powell's speech at the Jackson Hole Symposium this week, and they hope to get more clues about the central bank's future plans for rate hikes. This week will be rich in events. Apart from this symposium, there will be lots of fresh economic reports. For instance, US PMI figures for August are due. Other countries are also scheduled to reveal a batch of macro stats. As usual, the economic calendar on Monday is empty, and today China's central bank held a meeting. It decided to slightly cut its key rate again. It raised concerns among traders. Many central banks are now on a path of interest rate hikes, so monetary policy easing by the watchdog has only confirmed problems with China's economy and the real estate market. Nevertheless, the main highlight of the week will be Jerome Powell's speech. If Powell hints at a less aggressive tightening, Wall Street will experience euphoria. However, the opposite scenario is highly likely as well. Analysts warn speculators that they should not pin great hopes on the symposium. Powell's speech could be rather neutral. He may only emphasize the need for further tightening to cap inflation. In this case, markets will remain in a limbo until the September meeting. Meanwhile, traders have already adjusted their trading strategies after hawkish speeches by Fed officials. The US dollar index climbed above 108 points on a Monday. It approached the 20-year high of 109.30 that was reached in July. President of the St. Louis Fed, James Bullard, provided the most hawkish statements. He backed a third straight 75 basis point rate hike in September. He's also ensured that inflation has peaked. President of the Richmond Fed, Thomas Barkin, expressed a similar view. He also favored more rate hikes. However, stubborn investors are still betting on a modest 50 basis point rate increase in September. It appears market uncertainty will last until the end of the month. It's quite bullish for the US dollar as the main safe haven asset. So last week it jumped by 2.3%, logging the best performance since April 2020. And this week the index made once above 110 if the PMI's figures for August for the major economies show a further slowdown or a contraction in economic expansion. At the start of the new week, the yen dropped lower following a sharp fall last week. In the Asian trade, the US dollar rose steadily, signaling a bullish bias, so the dollar-yen pair is likely to grow to 140. Such a scenario looks quite possible given the widening gap in the rate hikes between Japan and the United States. The Bank of Japan has repeatedly stated that it will maintain an ultra-low stance. At the same time, the Fed has pledged to stick to aggressive tightening to rein in inflation. The latest data revealed that the annual inflation rate in Japan surged to an almost 8-year high in July. The core consumer price index approached the highest level since December 2014, hovering above the central bank's 2% target for the fourth month in a row. Today, Bank of Japan policymakers said that the regulator would keep monetary policy unchanged, even if inflation continues to rise for another 6 months. The dollar-yen pair declined to a 3-week low of 137.42 amid such statements. And the last week, the quotes grew by more than 350 pips. The pair could reach the second highest close level in recent decades. the long-term bullish trend remains intact. The next resistance levels are located at 137.80 and 138.80. A multi-year high is now at the 139.40 level. The AUD-USD pair made an attempt to recover despite the risk of sentiment. Besides, there are no positive drivers for further growth now. The bearish bias is still strong. Analysts are continuing on decline below a monthly low. The quote sank on Friday to a 2-week low due to the strengthening of the US currency. And the AUD-USD pair has already been falling for 5 consecutive sessions. As the result, it's led by 0.6875. A rally of the US dollar will continue to wind on the Aussie, and traders abandon risk assets because of renewed recession fears. And it's sure to address the fact the pair technical indicators are signaling the continuation of the bearish trend. So, the oversold zone is still far away. Nevertheless, traders should be rather cautious, given that the pair is unable to decline lower. To confirm a downtrend, the pair needs to drop below the monthly low in the range of 0.6870 and 0.6865. If so, it may test the 0.6800 level and then decrease to 0.6765. Of course, the price could slide even lower from these levels. For instance, it may hit 0.6700. After that, it's expected to approach a low of 0.6680, and then beginning of any significant rise will be considered as a selling opportunity. In a case of correction, the pair could grow to 0.6970. However, breakout of 0.70 will undermine the downtrend, forcing the peers to close a part of the positions. Now, investors are looking for clues about whether inflation has perked. Any signs of it may indicate a more favorable scenario for the US economy and the global one. Judging by the dismal situation in some markets, it's still early to count on steady recovery. And that's all for now. Subscribe to our channel and keep close tabs on the market developments. See you soon.